Tamika, and we are back. It's official. We're doing our first TikTok live, and as promised, we are doing it with American Funding and talking about everything payroll funding. So we're going to have them join us in the conversation, as well as give you guys an opportunity to come into the live, share out this TikTok live. We'll also be going live on our Instagram. And we'll be talking about questions that you guys have around payroll funding, along with a little bit of information about what it is and what it can do. Just for time's sake, I know it took us a minute to get online. Anna, if you want to talk, or Kim, a little bit about like what exactly is payroll funding, invoice factoring. I think it may go by a third name, and maybe tell us a little bit about you guys.
Yeah, there are a few different things you can call it. So we do invoice factoring, but of course for staffing agencies, we do payroll funding. And we do work with a lot of staffing, especially medical staffing. So basically we're advancing you a portion of your invoice amount so that you can make payroll and get your employees paid. And so we work with startups, we work with agencies who have been around for a while. Yeah, do you have anything you want to add?
Yeah, the main thing is it's just all about cash flow. So especially in the staffing industry, if you think about it, if you take on a new contract and you're sending people to work, a lot of times it's 30 days before you actually get paid. So you may go through 3 or 4 pay cycles before you even get paid on that first invoice. And so that's where we come in. And as a agency invoices, we're going to give them the majority of that money up front to cover payroll mostly, and then any other operational type expenses. And it's just kind of a peace of mind, especially for startups and newer businesses, to know that they've always got the payroll covered. And then they can grow and take on more contracts and work with more facilities, knowing they've always got that payroll piece covered.
Awesome. So one of the questions that come up with a lot of the nurses in our community, and probably some of the communities that you guys work within, especially as a newbie, is, how is it beneficial to a small business, more specifically, to work with a payroll funding company?
Yeah, so a lot of people do come to us, starting out, and the biggest thing with invoice factoring is it can help you grow. So a lot of times, when you've got one customer, maybe you can cover payroll, but then as you start trying to gain more contracts, it can really happen fast, where you might not be able to make payroll for all your employees as you grow. So we can really just help with that piece of things. Like Kim said, just peace of mind knowing that you can make payroll every week and you won't have any issues getting employees paid. And then also knowing that you can have that capacity to take on more contracts too.
Especially the newer businesses, truly what in an ideal world, you would have a line of credit at the bank, but as a startup company, or even in your first few years of business, a bank line of credit isn't always an option. Banks are a little more stringent in what they would provide, loans and lines of credit for small businesses. And so we try to be just another option to help out, especially startups and the ones that are, 1 to 3 years of business is kind of what our niche is. As agencies get bigger and more established, they might actually graduate to a line of credit at a traditional bank. And we encourage that. I mean, that's a great success story for us if that happens.
So some of the other questions that we have, and if you guys have questions in the chat, feel free to drop them in the comments, and I'm making notes as we're chatting to make sure we're kind of covering those things. Is what's the application process? So if I'm a new business owner in the healthcare staffing space, and I have maybe a couple of contracts, but my business is growing, how does that process look as far as getting started with your company or invoice factory?
Yeah, so typically the application process takes about a week, just depending how quickly people send stuff back into us. So that's from start to finish. So we start with a quick app. And that is just some basic information about you and your business. And then that's where we get that customer info. So we don't run credit on business owners. We just run credit on their facilities to make sure that they're credit worthy for what they're going to be billing. So that's that piece of things. Once the Quick app is approved, typically it's approved by the end of the day. So you'll know pretty quickly if that was approved. And then once we approve that, we send a full app. That's the second half of the application. And we just need a little bit of documentation with the full app. So we'll need to see like the articles of incorporation,
Tax ID number.
yeah, the EIN form, just a few things like that. And then we'll want to make sure that a payroll company is in place as well.
If they have employees.
Yeah, if they have employees versus 1099s. So once we have all the documentation in, and then of course we'll need copies of the contracts with customers that they want to fund too. Then after that, we're pretty much all set as far as the application process. So then we draw up our factoring agreements, we send those on DocuSign, and then that completes that portion of the process. And at that point, we're ready for the first invoice.
Yeah, we really try to have everything set up and ready to go. So as soon as they have the first invoice as a startup company, they're ready to get funded. And a week tops usually, especially for startups, it's a pretty easy process.
Okay. And then once they get started, then they kind of work with you guys as far as the process of them getting paid, and then also any payments given to the actual facility. So is it? I've heard this term used a couple of times, and I think some people probably would like to get clarity around like an assignment, like if you're assigning the debt to you guys, kind of how that works or what that process is.
That's a good question. So that's really the last piece of things. So once we have those agreements back, we're ready to send notice of assignment. And that's just an email, which of course, anytime we're communicating with a facility, our client is also copied on that email. And we just attach a couple of documents. It's called a notice of assignment, which our client signs. And that just lets the customers know that payments will be sent to our address or to our bank account, whichever they prefer. And of course, they'll still be made out to our client's name. They'll just be sent to us so that we can go ahead and get those invoices, factored, and then the payments processed once those come in.
So just to kind of clarify that a little bit more, so when we start working with a new client, we will give them 90% of the invoiced amount up front. And so that assignment just helps when that facility actually makes payment on that invoice, it'll come back to us. And so that's when we know to settle up that invoice, stop the clock as far as any fees that are being incurred. And then we do give that balance back, again, 90% up front. They get the remaining 10% less our fee once it's ultimately paid by the facility. So for us, it's just kind of a checks and balance. Since we're giving the majority of that money up front, we do want to have it circle back to our bank account when it's ultimately paid by the facility.
Okay. The last question that I have, and I'm sure you guys might have a similar one, is how do you manage when you have a non-paying client? How does that work when you're using a payroll funding company?
That's a really good question. And so I will circumvent that with, we truly try that not to happen. So before one of our clients starts working with the facility, we will run credit on that facility to make sure that in the past or history that they are a good paying client. So we try to prevent that from happening. But in the event that it does happen, we will try to collect on that invoice for up to 90 days, doing soft collections and trying to get that paid. Worst case scenario, it does not pay. We'll work with our client to kind of settle up that balance. And how that typically is done, we never ask our clients to give us the money back, because that's just not how it works. We might hold the rebate, which is that 10% that we talked about. We might hold that, or maybe split that with the client over the next few months to help pay that invoice back. Ultimately, we do want to get that money back. We kind of call it like a lemon policy. Like, let's say you bought a new car and 90 days down the road it stopped working. You'd kind of want your money back too, and that's kind of how we work with it. So we bought that receivable and we wanted, tried to collect on it for 90 days and we weren't able to collect. So ultimately we do ask our clients to pay that money back to us. I will tell you that we work with them in numerous different ways to make it not too painful, because we know they are a small business and that they just can't write us a check typically to pay that back. So we'll structure it in different ways to kind of pay it back over time. Bigger agencies, like what they can do is swap it out with a different invoice. Like, okay, this invoice didn't pay, let's swap it out with a new invoice. We can do it that way. There's just lots of ways to do that, but at the end of the day, we would want to get that money back, even if it takes a little bit of time to get that resolved.
Yeah, and because we do work with a lot of staffing agencies, in addition to running credit, we also, I think, have a pretty good idea of which facilities don't pay super well. We have a whole do not fund list of facilities that we don't want to work with because we know that they're not going to pay on time. So we definitely do everything we can to try to make sure that our clients are taking on facilities that are going to pay consistently.
Right.